Good morning, everybody. We'll be starting in just a minute. All right, here we go. All right. Let me go ahead and share my screen here. And we're off to the races. Good morning, everybody. Let me just pull up my handy dandy link here so that I could say hello to everybody. And we are ready to go. All right, here we go. All right, let's start off. David, Zen Master, CJ, Rick, Richard, Omar, Brian, good morning. Carrie, good morning. Kevin, good morning. Ali, good morning. We got Billy, we got John, we got Robert. Moondog is in the house. Yay. Jody, Deanna, Wardog, Marty, Art, Thomas. We got, we got a lot of people here. Duzzy, Jill, good morning. The Sassy Trainer, RP, Rebecca, David, Eagle Beagle. Good morning, Eagle Beagle. I hope you're doing well today. Kenneth. Oh, we got a lot of people here. Ricky, Rise, Motown Guy, Dennis, Dr. Serena, my actuary is here. Lewis, Dennis, Rick, Jesse, excuse me, Jesse, Wade, Gaston is in the house. Jacques is in the house. Cam, good morning. Back in the saddle. Yay. Glad to hear that. We got Richard. We got Rosalind. We got Rosalind. I responded to your email last night, by the way. You got to contact customer service for that. Robert, Scott, another Robert, Henry. We got Ben. We got Richard. Good morning, Richard Feinberg. Sandra. We got Armulfo. We got Henry. We got David. We got Nestor. We got Colleen. We got Sandra. We got Ben. We got Frankie. We got Dave. We got Peter. We got Karen. Good morning, Karen. We got Richard, Devin, Steven, Todd, Delroy, Ivano. Good morning, Ivano. JJ, Rick, Alan, and Shank. Henry, my wife's still talking. My wafu's still talking about you. My wife. Okay. 180 in 3 minutes. Love it. Dr. Serena, love it. Love it. Viv, Dylan, Nina, good morning. Good morning, everyone. I hope you guys are doing really well. Good morning, Sassy Trainer. Before we begin, don't forget, guys, don't forget Customer Service Live. They will answer all of your questions, including the ones that Rosalind had last night. All those download things, all of that stuff, that's all customer service. I don't deal with that, Rosalind. I have amazing people like Raleigh and Cam and Gustavo. Mike, good morning. So, folks, Cam just moved from Texas to Albuquerque, New Mexico. It's a big move. It's about, I don't know, about a quarter way through the country. Please, please be patient with him. It takes a little while for things to come back to normality. For me, it took about a week for things to come back to normality. Cam, hope everything is well. I hope that your new home treats you right, and I hope you have a lot of health and happiness there. Lastly, I have a class, a world premiere class called Win Both Ways Trade tomorrow. I will be talking about it's the VWAP pinch, and I'll be talking about that today, and I'll be giving you guys some freebies today in the VIP room, which starts at noon. So I posted a link. The first link is to the class that starts on Friday, and the first 250 people who sign up get a break. Also, there'll be a 2-minute video which I want you guys to watch, and then you can see more in the VIP room. I posted both links for you. Lastly, one more thing before we begin. They wanted me to tell you this, and this is important. I'm not trying to sell you anything. I'm just trying to give you heads up. I've been threatening you guys for a while that the cost of the trading pit is actually going to go up, not down. Now, I know a lot of you guys thought that was a sales tactic and that I was just doing this to to drum up more sales. No, no, that's not the case. I'm actually trying to drum up less sales for the pit, not more sales for the pit. I've got plenty of people in the pit. I've got over 1,100 people. Remember I told you that by the end of the year, my goal is to raise the retail price to $10,000. I wasn't joking with you. I actually meant that, and I still do. So just so you guys know, we're officially upgrading the lifetime upgrade price at the end of this week. So this is the last time that you can get, this is the last week that you can get the pit, the trading pit, before we raise the price. We are raising the price to, I think it's going to be 49.95 but we are raising the price on the pit because, well, what can I say? It's the coolest thing on Wall Street. So check your emails and Telegram link. We'll be sending you guys upgrade links on Telegram and on Slack, but we are raising the price to the pit. We're not going to be lowering the price. We're raising the price on the pit. And then we're going to raise the price again till we get to 99999. And it's not going lower. There's not going to be any holiday sales. The price is going up on the pit substantially. There's nothing like the pit. There will never be anything like the pit. And if you guys don't agree with me, please post it in the chat. But the price is going up. So you'll have plenty of opportunity. Today's Wednesday, but I'm just letting you know that at midnight after the weekend, the price is going up substantially. Substantially. It's not a threat. It's a promise. Okay. All right. So let's start. Okay. Good morning, Roddy, and thank you for that wonderful emails. I don't know anything about prices, Tony, but I know that it's going up, and I know it's going up again. My goal is to raise it from the retail price. I don't know what the sale price is, but the retail price is 4,995. My goal is to make it 9,995 before the end of the year. I am not interested in selling it cheap. I'm interested in making it very exclusive, very, very private, very sought after, and the best thing you could find on Wall Street. So far, I've done that times 10. So I'm raising the price. I'm not lowering the price. I'm raising the price. All right. No, not 49.95. Your zero, your dot, Vice, your dot is in the wrong place. You got to move it over twice. All right. So let's begin. What are we looking at today? Well, NASDAQ is down a little bit. There's not much going on here. Carlos says, how easy we pay for a car that goes down in value, yet hard to invest in tools that'll help buy a car every year. Best I've done. Thank you, Carlos. I appreciate it. Very, very nice. Very, very nice of you. So let me just post this here and we'll begin. All right. So we're looking for a little softer opening. A little softer opening. Hey, Marshall, how are you? So don't be surprised. I mean, the market's been going pretty much straight up. We're almost at a new high. Matter of fact, the Dow and S&P made an all-time high. The only thing that's holding us back is that descending downtrend on the SMH, which is not helping us at all. That's okay, Viv. I get you. So this is something we got to pay attention to. Momentum levels are not overdone just yet, so you don't have to worry about it. We're still at 343. We haven't got to 400 yet, but I am bothered by the fact that there's only 16 stocks to the downside. Yeah. Thank you, Barbara. So we have to be careful. We have to be careful because the markets don't go straight up, and we've already had I think we've already had a run day this week. No, we haven't had a run day this week just yet. Yesterday I guess yesterday could have been construed as a run day. It was a very volatile day, but I don't know if it was a run day. I'll take a look at the analysis. But we did break higher. We can't just keep going higher, especially if the NASDAQ won't cooperate. Rick says, I saw value in your service years ago, bought limitless services and put it on credit card. Well, that was an investment, has been paid off 100-fold. Wow, 100-fold. Jeez, that's pretty nice. I appreciate it. Thank you, Rick. And thank you for that wonderful email. I shared it with everybody yesterday. Thank you for that nice note you sent me last night. I did share it on the Telegram channel for everybody. Good morning, Elizabeth. Armulfo, I think I got it right. I think I got it right. If I didn't, I apologize. So be careful. We may see a little bit of weakness in technology stocks and in the broad market because we've been going straight up, and markets don't go straight up. And there's just too much upside with very limited downside. Crude oil. Crude oil is in twilight zone right now. We're between all of these. We have huge resistance here. We're still in a downtrend, but we're moving against the uptrend, which means we do not move. Hey, Scampy 605. Welcome, 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 welcome. So be careful. We don't want to really do anything with energies right now. When I say energies, let me clarify that. I'm being very specific about crude oil. I'm not talking about natural gas stocks or stocks that are on the fringe of energies. I'm only talking about, the main culprits, Oxy and SLB, those stocks, the ones we always familiar with. No soup on that right now, because most likely than not, we're going to come up a little bit more or start heading down here. What I'd like to see is us starting to short when we get positioned back to the short side near the 69.50 level, but nowhere higher than that. Okay. Um, for some reason, I didn't have gold up today. Let me pull up gold real quick. This is the second day in a row I overslept by 7 minutes. I don't know what's going on with me. I usually undersleep, and I wasn't particularly tired last night. I think it's the time change maybe coming up, or maybe it's darker outside. All right, gold. I told you guys that I still like gold. I was still very bullish on gold. As long as we stay above the 8-day EMA, I will be bullish on gold. My only fear is that we're getting a little bit overextended, and I'd like to wait for a pullback. What does that mean? That means if you're currently in a gold stock, what you may want to do is you may want to reduce your exposure a little bit. But yes, I still like, hey, Dun from Hawaii. My goodness, Don. Jeez. Whew, what is it, like 4 in the morning there right now? Do you go back to sleep after the show's over? That's what I would do. Anyway, so I like gold. I'm not bearish on gold. And actually, the fact that China is getting emboldened right now is actually even better on gold, because they're going to be buying more gold. There's something going on in this world, folks. I can't explain it right now, but the market is not operating on all fours. I actually, thank you, Dr. Serena. I appreciate that. I actually wanted to talk about it yesterday, and I did a little bit in the VIP room, but I'll talk about it a little bit here as well. Actually, I didn't talk about it in the VIP room. I talked about it briefly when we had the class with Jeffrey yesterday. What do you? Eagle says, I have 3 lifetime programs, the PID, the dashboard, and Delta Miner. All 3 are my foundations, have taken advantage of many services. You never let me down. Thank you, Eagle Beagle. Wow, we're getting some really great testimonials today. Thank you. You guys rock. Appreciate it. Hopefully I can keep doing that without disappointing you guys. Yeah, you slept right through it, huh, Cam? I think maybe it's because it's getting darker outside. Thank you, Eagle Beagle. I appreciate it. Analyze, please. What do I think of JD? I haven't looked at JD, but all Chinese stocks were up like crazy yesterday. Thank you, Rick. And thank you, Gulshan. I don't know if I'm pronouncing your name right, but maybe you can ask me towards the end and I'll tell you. But I'll be talking about Japanese stocks in a minute. 20, yes, snap after the close. Good for you. Good for you. I used to do that when I used to live in LA. I used to take a little nap right after the market closed for about 45 minutes. It used to be great. Hard to operate. Can you imagine me doing this at 5:30 in the morning in LA time? Whew. Hey, Edward, good morning to you. So let me say something. I mentioned this yesterday. So you guys ever watch movies, like old movies with subtitles, like foreign movies, and you're watching a movie, and again, I'm not trying to make fun of any foreign movies here. That's not the point of this exercise. But you're watching a foreign movie, and the video is slightly ahead of the sound, or the audio is ahead of says things look cooler today in China. Yeah, they do. They do. Yes, they're tanking pre-market. I will talk about that in just a few minutes. But this is how I've been feeling since the FOMC came out last Wednesday. Okay, I've been feeling. Oh yeah, that does take some time. That does take some time. Oh, good, good. Yeah, the sync is off. That's how I feel with the market right now. Like we are not connecting. Like there is a disconnect between the fundamental news and the technical news. Let me give you an example, okay? Usually, I may not agree with the fundamental news, but usually I could see what is causing what to move. Usually I could say, oh, okay. Well, if this is happening very broadly, blue chips should rally. Okay. Well, so we had, let me explain, because this is important. So remember we had the FOMC. Remember nothing happened. Well, and I was like, well, what's going on? Where's the market? And then the next day, the market did exactly what we thought it was going to do right after his announcement. You know what I'm talking about. We were all here, right? I was actually working from home. We were all together during that announcement last week. And then the next day, the market moved, right? Yesterday, Chinese announced a huge move, right? When China gets stronger, there are certain stocks that should be moving that were not moving yesterday. Okay. You noticed how yesterday the tech was stronger than blue chips? Financial stocks should have been stronger than tech stocks, because when China gets strong, that's not really all that great for chips here, because there's a fight, but there's a competition between China and US with chips. So Chinese economy getting stronger shouldn't propel chip stocks. It should actually propel blue chip stocks. Meanwhile, what did the Dow Jones do yesterday? It didn't do squat. It didn't do squat. So it's kind of like, yes, exactly, Eagle, what you're just saying right now. The field of market is missteps in every session. I don't know about every session, but since the FOMC, I've been feeling this way. Like we're just like we have like almost like a delayed reaction to things. Like things that should be happening right now are happening later. Okay. Now, does that often happen? No, it's actually the first time it's happened in quite some time. But I've got to bring it to your attention because that's not normal. And usually periods like that don't last very long. Living a why and a half. My alarm set 4:30. Wow, Art, you're a dedicated follower. So again, I don't know what to make of this, but I would just say be very, very cautious, because things that should have been moving yesterday were not moving yesterday, and things that were not moving yesterday were really moving yesterday. Rick, I think you're probably right. The market is trying to find the bearing or trying to understand how to trade with it. And maybe go what I'm okay. So here's my theory. Okay. You guys know how the markets are being driven by global economy now, not US. US is not the driver anymore. The global economy is. So I think the US just doesn't know what to do with Powell's news till after the global markets start rocking and rolling at night. And then it starts getting back into sync. Exactly, Rebecca. It seems to be a day off. So I don't know why. I don't know how. It's not something I see very commonly. It's not something I follow very commonly. It's not a big. I don't. I can't say it's like a big deal because we're not micro. We're looking at the big picture and the little picture. But what I'm going to say is be careful intraday trading the next couple of days. And also, I'm going somewhere with this. And I mentioned this to you yesterday. Here, I mentioned this to you guys yesterday in the Telegram channel. This right here. See, market is fragmented and sectors are all over the place. The Fed feels like we need a bit of consolidation while the market figures out the next major catalyst. And Carlos and Rick and all of you who are following me along here with this rhetoric that I'm talking about, I think it has to do with the fact that the market is trying to find its place, especially the U.S. market, because the news from Powell was coming from such a. Again, it's just my head was spinning. So if my head was spinning, I'm assuming a lot of hedge fund guys' head was spinning, and if their head was spinning, they're looking for direction for global economy. Also, and I'm going back. Most of you have been in this movie long enough, in this movie that we're in right now. So I can kind of go back and forth. If you look at the sectors today, I don't mind going back and forth. I usually don't do it. But remember yesterday I was trying to tell you how you have the Dow Jones here, and next to the Dow Jones you have retail, which is very interest rate sensitive, and then you have the Russell, and then you had communication here and semis here, and they were all over the place. Honestly, not as bad as they were yesterday. We're clearly seeing tech stocks starting to come up for air, starting to come up. Speculative defensive stocks like blue chip stocks starting to come down, and interest rate sensitive stocks are now sprinkled. But if you looked yesterday, you could see we were like all over the place. Semiconductors are here, consumer discretionary is here, communications is here, all over the place. Consumer staples is here. Meanwhile, industrial is here. I mean, like no rhyme or reason. And you noticing this yesterday, notice that we had a period where tech was strong, blue chips were weak. Last night, after markets, we had a strong tech. Dow was weak. We're starting to see that divergence that we had about a month and a half, 2 weeks ago. So usually what happens when markets get off sync and when you have sectors that are all over the place, you may see a day where the Dow is up and the NASDAQ is down, or the S&P is up a couple of points and technology's down a few points. When you see days like that, that means markets are it just confirms what I'm saying. Markets are fragmented and they're looking for directional bias. And when you see markets are like that, it makes it much, much harder to have run days, because how can you have a run day when everything is out of whack? It's like the Dallas Cowboys cheerleaders. One is doing this and the other one is doing this. They're all out of whack. They're not singing to the same song. They're not dancing. They're out of whack. So I'm starting, my point in this long discussion that I could have made much shorter is that markets appear to be getting to be a little bit out of sync right now and out of rhythm. And when that happens, we tend to become more choppier and less directional. That's all what I'm trying to say is we may have a extended period of choppiness because sectors are out of whack. Market data is not giving us the reaction we usually look for. And by now, I could probably tell, I've been doing this over almost 31 years. I could tell the reaction we're supposed to be getting, and we're not. So remember, everything is together. It's not this is here and this is here. We could analyze that way, but we got to bring it together. So all of these things that are not really related are like the fact that news is keying off of international markets and not U.S. data. The fact that we don't have any earnings on the horizon, the fact that the market has been delayed reacting from FOMC and from yesterday's Chinese data, it's basically telling us that we may have an extended period of choppiness or consolidation till this fragmentation till we pass this fragmentation. Yes, we're out of sync, Francis. Basically, the music is out of sync, the dancers are out of sync. Everything is like Twilight Zone right now, okay? Twilight Zone. So usually when that happens, you could still have really good moves from individual stocks, but you may have sectors that are kind of all over the place. So it's definitely a time you want to start looking for the strongest and the weakest stocks only. You don't want to look for any noise right now, okay? And again, sometimes I overspeak, but I'm doing this to protect you. I'm doing this for your benefit. So gold is still moving higher. If you're not in gold, don't go buying gold right now. Don't. But if you're in gold, it's okay to stay in gold, but lower your exposure a little bit. Thank you, Dr. Serena. More trends that are mature and developed versus trying to find the latest breakout from nowhere. Basically, false breakouts. So what happens when you have false breakouts? You want to deal with stocks that are already moving and have been moving for a while. If we've been consolidating for a while, then you want to look for stocks that are just now starting to break out. But right now, it looks like markets do two things. They trend and they consolidate. They trend and they consolidate. The longer they trend, the more they consolidate. The more they consolidate, the better the trend. I know I'm breaking it out. I know I'm breaking this down to the most. I mean, I'm talking to you guys like you're in second grade, but we've been in a very long uptrend. We just made new highs. The market has been trending. So what's the next cycle? Consolidation till it finds the next catalyst. And it would also make a lot of sense because we don't have earnings starting for another 2-3 weeks. And we don't really have a lot of Fed data on the way. So the market, I think, is trying to find itself, trying to balance itself, trying to figure out if it wants to stay at these levels. I think this is a period for the market. And on top of all of that, remember, we're entering an election period. So now notice I've said a bunch of things that have no relationship to each other. Like, what does the FOMC delayed market movement have to do with presidential election cycle? Nothing. But when you start combining all these things together, you start painting a picture. It's like a detective. You know, they have a board and they start just putting a bunch of stuff on the board and then they start combining it. Well, right now we're kind of putting that stuff on the board, and the picture that I'm getting is that the market doesn't have a good directional bias. And again, it's all of these things together. It's not, oh, this indicator is telling me this, that means the world is crap. No, no, don't be ridiculous. It doesn't work that way. But what I'm telling you is when you can take 15, 20 different things like I've been doing over the last 10, 15 minutes and kind of it creates a picture. It may not be a really clear picture, but it's a picture, and a picture is better than a sharp stick in the eye. Okay, so if you're currently long gold, it's okay to stay long gold, but my suggestion is start reducing your position because I think sooner than later we're going to be coming back to the 8-day EMA, which is just up here. Okay. Yes, CSI Wall Street. I have a CSI Wall Street T-shirt actually. I do, Jen. I do. Yeah, storyboard. There you go. 10-year bond. 10-year bond is only confirming our picture. The Fed said lower rates. So in theory, the bond market should be embracing it and moving higher. But what is the bond market doing? The bond market is not moving higher. The long bond, the 10-year bond, interest rates are going higher, not lower. You're welcome, sassy trainer. You're welcome. So this is not happiness. And now we're officially below the 8-day EMA. 1, 2, 3, 4, 5 days. 5 days. We literally had the announcement like 5 days ago, and we've been trading below the 8-day EMA. That's not strength, folks. That's not strength in the bond market. Also, don't forget, I have a class on Friday, win both ways trade, and I have my VIP room at noon today. We'll be talking a lot about all the variables and getting tighter on all of this in the VIP room today at noon. Please don't miss out. Also, don't miss this is a brand new class. This is a brand new groundbreaking class where I'll be talking about the VWAP pinch. That's called the win both ways trade. Marketing has a way of, changing names, but that's what I'll be doing on Friday. Don't miss out. And don't forget, Customer Service Live, Cam and Gustavo show. Be nice to Cam. He's going through a lot of, stress right now with time change and moving and driving. So bond market, I'm not happy about the bond market. This is going to put pressure on bank stocks and interest rate sensitive stocks, okay? Which have not been really on fire last few days, which is not a good sign after the Fed. Think about it. The Fed just made the biggest announcement in years, and bank stocks are not breaking out. You see what I'm saying? It's just not thank you, Rick. It'll be very interesting today as well, I promise. Okay, so gold is and by the way, gold making new highs when we're entering a deflationary period is not a deflationary sign. Just gold moves when we have higher volatility. And volatility, folks, still to this day, even with markets at an all-time high, volatility can't go down to 11 or 12 or 13. We're still at this level, which is telling me that we're not out of danger zone just yet. Now, what is that? What do I mean by danger zone just yet? Danger zone. Remember, semiconductors, tech, the weakness we have here, the 100-day moving average, my trend line here. We still haven't broken yesterday's high. This is the high yesterday. We still haven't broken it. Yesterday, we did not break out this high from 4 days ago when the Fed announced they were lowering rate. This is the Fed announcement right here. We still were not able to break higher. Still not able to break higher. That's right, Carlos. Could dollar be coming back out of the bond market into the stock market due to the Fed lowering rates? It could, but it seems to me like money's coming out of the market, CJ. Because look, this can't get it up. This has to get it up. I'm not going to repeat myself for the 150th time. If this can't get it up, the Nasdaq can't get it up. If Nasdaq can't get it up, then the S&P can't get it up. This is down so far this morning, and we still can't break the 100-day moving average. All right, all right. Let's put everything together. Let's put everything together, and then I will. Ooh, look at that. 430 people here already. And I will then talk about the stock market in more depth, but let's put everything together. By the way, tonight we have Micron earnings after the closing bell. Um, Micron, I don't know if you guys know this or not, on a fundamental basis, out of all the chip stocks, guess what stock is supposed to guess which earnings estimates are the best for what stocks? Expectations for all of them. Micron. Expectations for Micron are all the way on the upper right of the edge. They for a Qualcomm, they're all the way on the left. Intel and Qualcomm, they're all the way on the left. Micron is the number one stock in terms of Wall Street's expectation for chips. So if Micron doesn't outperform today, it's going to be very, very ugly for chip stocks. On the other hand, if Micron, and remember, it's not about whether they outperform or not. It's about their forward-looking statement. Remember AMD? They killed it, and their forward-looking statement sucked. NVIDIA, they killed it. Their forward-looking statement sucked. So we got to be very, very careful today. Hey, Ivan. Good morning, Manuel. So we have earnings on Micron after the close today. Micron is a very influential stock, and it has extremely high earnings expectations, the highest earnings expectations of any company. Yes, that's right, Eagle. And what will happen? This bar will start coming right back here, and all of this will move right back into the channel, and then we will be saying this was a false breakout, and we're back here, and thank God we didn't buy semiconductors at 265. And if this breaks down, no, I'm not teaching you anything new right now. You've seen this song and dance at least 100 times. Then this will break down unless software miraculously overcomes the shadow of semiconductors, which it's very hard to do. I find it very hard to believe that chips will be breaking down the hardest they've broken down in years, and software stocks are going to be the savior. I don't think that's going to happen. So if that happens, you see, notice we haven't broken this trend line yet. We will if Micron is bad. There you go, Rick. There you go. Yeah, Costco's coming out tomorrow, Rick. When you have companies like Target, Costco, Micron, look to see, is it an essential company? Yes, they are related. They are all in the same ballpark. Okay, let's put everything together. Federal Reserve is waiting for earnings from Micron. That's huge. Again, not because there's such a huge impact on the sector, because they have a big impact and they have huge expectations today. MU. Robert, it's MU. Here's the symbol for Micron, MU. And here's my email address. There you go. We're at a NASDAQ posted a 2.5-month high, while the Dow and S&P made an all-time high. So right away, just by reading this sentence, you could tell that there is that if S&P and Dow, blue chip Dow, it says blue chip Dow made an all-time high, and NASDAQ is only in a 2.25-month high, you clearly can see that there is a lag in the technology sector. Now, if you look at sectors over the last few days, they've actually been coming up. Semiconductor, QQQ, consumer discretionary, communication, not so much, but the rest of them have. Here's QQQ. Look at it 2 days ago. QQQ was here. Look at it last Thursday. QQQ was down here. Look at it last Wednesday. QQQ was down here. Now look at it today. QQQ is now up here. It's moving up. But even though it's moving up, it's still behind. It's still behind, which means it's still lagging. And what is causing this to lag? Semiconductors. And if without semiconductors, NASDAQ 100 would be at an all-time high. It would be in effect where the S&P 500 is, because all the software stocks are making all-time highs. You see how we're able to kind of group everything together? This is interesting. NVIDIA CEO said he's done selling shares. I don't know if that's going to prop up the price or not. NVIDIA has not been leading the market for a while now. Chinese stocks soared after JD, PDD. Who took profit yesterday on SE? Who took profit on SE yesterday? You're welcome. And by the way, we also took profit on a utility. We took two profits yesterday in the pit. Uber rose 3%. They were upgraded. We have a short position in Uber, which will probably expire, but it is hedged in the weekly cash flow, and I'll probably give you guys a new cash flow trade. I'm waiting for earnings on Micron. I'm going to send you guys an alert, but I'll be sending you an alert, an update on it. I have a plan. I'm waiting for the earnings on Micron. Visa did not do well. Financials have not been leading, which is not good. Just as department's going after them, I believe they actually have a good point. Visa has been monopolizing the U.S. debit card market. Between you and me, they have. Not that I really care, but they have. Nice. Nice. And what about the utility stock we had yesterday? The day trade I gave you. Did you guys make money on the utility stock? Look at you guys. Now you guys see why I'm raising the, by the way, again, just so you guys know, the price of the Pro Traders dashboard and the pit, not Pro Trader dashboard, the pit, is going up this Friday night. If you haven't upgraded to lifetime, this is not a marketing ploy. This is not a marketing scheme. I am raising the price. I will not sell pit, the price of the pit. My goal is to raise it to 9,999 before the end of this year. If you guys don't think I'm going to do that, keep an eye on things because you'll be surprised. VST, yes. VST, good. Made money on VST. I love when a plan comes together. All right, now, these are things that the Fed doesn't want to talk about. Consumer confidence fell. Biggest drop since 2021. Perfect time for Fed to start lowering rates, right? VST, yes, VST. Yeah, we're done with VST, RJ. You can mention it. We're done with it, or we closed it yesterday. Yeah, if I close a trade, you could talk about it till the cows come home. So consumer sentiment, this is bad, folks. This is bad. This is why gold is up right now. This is why volatility is still at 15. This is not deflation. This is why I think Powell is making a total asset of himself. Nice, Hirsch. Nice. Good to hear that. We're not done with the bargain hunter one, though, but we are done with VST. Look, manufacturing survey fell to a 4 1/3 year low. Now, I don't know about you, but does this look like a time where things are getting better when consumer sentiment falls to a 4-year low or a 3.5-year low and the Fed manufacturing data falls to a 4-year low? You're welcome. Yep, VST was a very fast trade. Oh, I love you, Robert. That's very nice of you. Very nice of you. You guys rock. I love that. Love that. Let me just grab a couple of these, post them here. There you go. Thank you for that. Yeah, you'll see updates in your members area. Hey, Rochelle, how are you? You'll see updates in your email, but if you guys want to upgrade the pit, this is the time to do it because prices are going up. Okay, let's see what Bowman has to say in light of this data. Does she even talk about this data? Well, let's see what she says. Central banks should reduce interest rate as a measured pace, noting that inflationary risk persists. What? Didn't Powell say we don't have that right now? Yeah, we're getting close to the 500 club. That's right, Cam. Didn't Powell say that that there's no inflationary risk? What? And labor market has not shown significant weakening. It hasn't? Okay. Significant. Notice she says significant weakening. He says it's stronger than everything is great. According to Powell, there's no problems. Turning to the risks to achieve our due mandate, I continue to see greater risk of price stability. I don't remember him saying anything about that, especially while the labor market continues to near estimates of full employment. Now, wait a minute, wait a minute. So is my head's going to start spinning again. Yeah, I want to see pictures of the kitty. Good luck, Rochelle. There's a 41% chance that they're going to cut rates again. I don't even know what to say about that. I'm not even going to comment on that. We've got earnings on Micron today, GEF, which is actually one of my stocks on my watch list. So we're going to have to scratch this from my watch list because it's got earnings today. Let's scratch that. And CTAS, which is not a big stock, but Micron is. We also have new home sales today, building permits, crude oil. Now, who writes this data? This is quotes. This is her quotes. This is quoting her. I'm quoting her. They're just quoting her, the Fed. Nobody's writing this, Mazen. They're quoting it. But in light of what I'm talking about, new home sales and building permits, just so you know, I'm jumping ahead a little bit. But KB Homes reported weaker earnings. So if the report today at 10 a.m., this new home sales is bad, and we've already had we've already had KB Homes, it may cause a slump to home builders today. So if you see weakening home builders today, building home supplies, that's because we had a downgrade on KB Homes. And again, that's like Target for home builders. It's a very, very big stock. Okay. And we have crude oil inventories, and I don't think that's going to be big, but we're not going to do anything till 10 a.m. today. Angie, how are you? Nice, Angie. Good to hear that. Good to see that. If there's a will, there's a way. Has been real good so far, despite being a bad month historically. It follows Roger's teaching and convinced every month can be good. There you go, Rick. Love it. Love it. Love it. All right. Europe is down, not giving us any tailwind, giving back some of the previous session gains, which were spurred by Chinese comprehensive monetary stimulus package. The U.S. did not bite on that one at all. Tech and energy stocks lost ground on Wednesday. Tech. Tech was not strong yesterday in Europe. China closed higher today as investors remained optimistic that Beijing package could spark a market recovery, jumpstart their economy, blah, blah, blah. Broker and bank stocks led the gains. This is why I was expecting financial stocks to rally, blue chips to rally yesterday in the U.S. Because if China goes well, it's good for U.S. economy too. The yuan advanced more than $7 per dollar for the first time since May of 2023. China's central bank on Wednesday reduced their interest rate. Basically, it's Disneyland in China. I like that, Mike. I got that. Nikkei ended lower, snapping a four-session winning streak, likely due to positive adjustments as investors are waiting a new catalyst. Financials and healthcare stocks led the decline. So Japan and Europe could not keep it up after China, and U.S. right now is slightly lower. And remember, we have Costco and we have Micron earnings coming up, okay, in light of all of that. All right. And volatility still overextended. All right. So momentum level. Last thing. FXI. Ooh, I'm going to be late to work today, I think. Come on. So this is China right here. This is China, and this is where we're at right now. Do yourself a favor, okay? Do yourself a favor. Keep your eye on FXI. So Rick and Brian and Rochelle and Cam and RJ and all of you, Angie, all of you, keep your eye on FXI and put an alert right here on 29. What's the low here? 29.28. Put an alert on 29.28. If you see this breaking down during the day, you're going to see volatility start moving higher, and you're going to see all those Asian stocks, Chinese stocks that rallied yesterday. you're going to see a breakdown of them. Notice we're not up here right now. We're all the way down here. So if you see a breakdown here, you're going to see a lot of what happened yesterday come undone. Come undone. Okay? But again, I would wait to see. We're way below the 29 level. We need to start filling this gap for that to happen. Okay? But if you see that, don't start buying Chinese stocks. And again, the US market did not buy what China was selling yesterday. But remember, we always have a delayed reaction. Maybe today blue chips will go up like crazy. I was expecting bank and financial stocks to do well yesterday because in principle, Chinese economy, it's not good for technology in the US because there's a fight. But global economy getting stronger on China should be positive for US. Didn't happen. So, momentum levels. Tech right now is leading, semiconductor, consumer discretionary, QQQ. The question is, interest rates are not leading. Technology is leading right now. And we could potentially see some negative news for home builders, which is blue chips, which would push blue chips even further down. But in the last few days, we've seen technology lead and blue chips follow. What I'm looking to see is for technology to either really, here's what I'm looking. I'm looking for technology. Here's the one from this morning. It's my Vail, Colorado mug with dog paws. See the dog paws prints on it? All my cups have dog paws on it or animal paws on it. So one of two things is going to happen. We're either going to see a very strong rally following Micron earnings, or we're going to see the whole thing implode. I don't think we're going to be in the middle. Okay. I don't think we're going to be in the middle. So I think what's going to happen is you're going to see a major breakout from QQQ right here, start to take us all the way higher, or this is going to fall apart and take us down. If this takes us down, SMH, and I don't want to go through this again every single day because I've been doing this. Thank you guys. Then this will implode. If earnings on Micron are good, it will start taking the rest higher, and this will get validation. So what you're going to see over the next few days is even more upside on speculative stocks, or fizzling out and starting to come down with blue chips starting to come up, and utilities, consumer staples, all those stocks that have been lagging behind last few days starting to come up again. Again, I think that has a lot to do with the next 24 hours. Don't know, Eagle Beagle. Based on what I'm seeing right now, I think the odds are much higher of seeing implosion than going higher because the S&P is already at a 52-week high. There's no major catalyst right now. Every semiconductor company had negative AI statements going forward. And again, we're already at this level, and it doesn't seem like we can break higher. So we need a major catalyst at this point because we're literally at all-time highs. And if we don't get a major catalyst, this will revert right back down, back into this level, and this will start coming back down and heading towards the 50-day moving average. Micron and Costco are going to be the two factors that give us a drift. There simply isn't any other Fed data. I mean, you've got GDP tomorrow, but this is a revision. This is a revised number. And you've got him speaking. But again, I think he already took, I don't think interest rate, I don't think the market is going to be as sensitive towards interest rate because we are already in a deflationary period. And this is a revision. So I don't think these are going to be market making moves. I think personal income is going to be a move. But by this time, we'll already see the fallout from Micron and Costco. This is why I say, when will you be sending the link for the new... that you will be, I did already. I did, and I'll send it again. It's right here. Here's the link to register for that right here, Bob. Win both ways trade. And that's the VWAP pinch. And I'll be talking about that every day till Friday in the VIP room, including today. So we don't have major volatility. We don't have any directional bias. I'll talk about intraday levels in a second, but as far as the market, we're near all-time highs here. We're all-time highs here. We're nowhere near all-time highs on the QQQ, simply because we have this SMH, which is a big thorn on our side, and it's not giving us any indication of whether it's breaking higher or not. And I think Micron is, and I think this week, by the end of this week, we'll have a very good indication if SMH wants to break out or whether SMH wants to come back down to the 200-day moving average. You wanted me to look at what? You wanted me to look at JD? I'll take a quick look because it's a Chinese stock. Gulshan. It looks, didn't I already talk about FXI? Didn't you hear me say if FXI breaks the low, all those Chinese stocks will be done? Didn't you just hear me say that a few seconds ago? Doesn't JD look exactly like that? Isn't JD one of those Chinese stocks that rallied yesterday? I thought we covered this already. Keep your eye on FXI. If FXI goes into the gap, you can kiss all those stocks goodbye, Gulshan. That's pretty much what I said. Right here. I even gave you a level. I said below 29.28. You got to listen to me, man. I've already analyzed it for you. I literally gave you that before you asked for it. He's not listening to me. Okay, let's do intraday levels. So momentum levels are not overdone yet. Momentum levels still have more to go. We only have 343 stocks breaking out. We hardly have any stocks breaking down. That's concerning me as well. And that's another reason why I think the market is not ready to go higher. The market has been too much of a one-sided market for too many days. And I think we need to start getting some elasticity into it. Okay? So, intraday levels now. I talked about it, Rochelle. I talked about QQQ. Fred, I already explained to you. I think a lot of it will be dependent on what happens with Micron. You're not going to be late to the party, Fred. Look, Fred, let me show you something. Look, why do you want to anticipate? If we break out of here and this area right here, we can go all the way to 265. That's going from here all the way to here. If we don't, we can go all the way down to here. Why not buy a put when you have a much clearer bias of direction? Okay? All right. What you may want to do is buy a straddle on SMH because I think between now and Friday, I think we're going to have a nice big move. But I'll see if there's, that's not right now. I have to see how volatility is tonight and all that. But we have GDP, we have personal income, we have a lot of unforeseeability right now. We have to be very, very careful because what happens if I give you guys a long on a tech stock, the trade goes against us for half an hour, I end up making it a swing trade, and then we get stuck for the next 2 weeks in it. I don't want that. Be careful. We've got personal income coming. All right? So Fred, be careful. Be careful right now. Be careful. Be careful. All right, intraday levels. Look at where we're at right now. If we come back here, we can go all the way down, Fred, all the way down to here. You're welcome. You're welcome, of course. And you guys can always email me, with good questions like that. roger@rogerscott.com. We're at a very interesting point right now where this thing can really break out or this thing can really bust out. But you see this? This is the line in the sand right here. And I haven't changed anything in a few weeks now. Same thing. Okay, levels on SMH. The upper level is right here, 244. This is that trend line right here. So you see how we tried breaking it here, Fred, and we tried breaking it here and we couldn't, and we're right here right now. So if you see us going lower today towards this trend line, there's a higher chance that we're going to break it. Remember, this is the line. This is the line in this line right here is this line right here. See this line right here? I'm just taking a closer look on an hourly. This is it right here. So if we break out of this, we can go higher. If we don't break out of this, that's the problem. Meshuggah. That's right, Eagle. Meshuggah. Yes, there will be great plays to the downside if I see SMH crossing below this level, I can assure you, including some really great chip stocks that are breaking down right now. SPY, let's look at the SPY. Oh, so let me give you those levels. I drew them, but I forgot to give them to you. I'm getting overzealous. 244, and here we got 237. Okay. SPY. I may reach out to you guys to tell me those levels later today. We're still in these levels here. We got 573 on the bottom. We got 569, and here we got 566, and we're just kind of here. See, kind of we're like in the middle of things right now. Is there ever a day where you don't have to be careful? Yes, Oliver. Yes. Look, you see right here, you didn't have to be careful here at all. We were in a bullish uptrend. You could have thrown a dart and just gone long here, and you would have been okay. Same thing with right here. But right now, we don't have a clear directional bias. You see that? So yes, there are days where you don't have to be careful. So the level here is 573, 570, 565. QQQ. You're welcome, Fred. Yep, that line is literally the 100-day moving average. That's right. That's why we use those averages, because the large boys use them. Institutions use those lines. Do you think there's really any value to the 100-day moving average? No. But if everybody's using it, it becomes a self-fulfilling prophecy. That's why I don't use indicators. That's why, okay, why do indicators work? Because other people use them. What indicators, what are the three most used indicators on Wall Street? The 50-day moving average, 100-day moving average, 200-day moving average. What indicators do I use? The only reason the indicator works is because more people are using it than not. If I have a room of 100 people, and if I ask who here uses the 50-day moving average, how many people are going to raise their hand? Everybody. If I have a class and say, how many people use Elliott wave here? How many people do you think are going to raise their hand? Indicators work because it's a self-fulfilling prophecy. If I do a conference with 100 people and I ask how many use the 50-day moving average or 100-day or 200-day, how many will raise their hand? If I ask the same crowd, how many use Elliott wave, how many will raise their hand? Indicators work because it's a self-fulfilling prophecy. Did you guys understand what I just said? Indicators don't work because there's something to them. Indicators work because if 1,000 people use the same indicator, price levels will start working. Yes. They don't work because there's anything special to them. There's nothing special about the Fibonacci numbers, okay? Fibonacci would only work if there are 1 million Fibonacci users using it. If I have a class with 100 people and I ask you to raise your hand and say how many people use Elliott wave, how many are going to raise their hand? If I have a class and ask you if you use the 50-day moving average, how many are going to raise their hand? Next time you ask me, does Elliott wave work? Ask yourself that question that I just asked you. Yes, Mike, I know, Mazin, yes, I know I am right on that one. Exactly. Rochelle, Mazel Tov. All right. Hey, you already live in New York. You should know Yiddish front and back. All right. Levels on the NASDAQ. 480, 485, 480, 477. And here's that ugly trend line. Here's that trend line. Remember? SMH, it's down here, but here. So if we go back into this little area right here, RJ, listen, RJ, this is all I'm going to say. You see, the best way to get into your thick skulls is to make you ask the right question. Then you will have that aha moment yourself. RJ, if I have a webinar with 500 people, which I do every single day, including right now, and I ask these 500 people, how many of you use Fibonacci numbers? How many are going to raise their hand? I have 483 people in this room. And if I ask you how many people use the 50-day moving average, how many people are going to raise their hand? Indicators work because other people use them. Indicators have absolutely no value amongst themselves. You guys do know that, right? If you have 1,000 people using the 50-day moving average, then price will start reacting to the 50-day moving average. So the next time you ask me a question, Roger, does this indicator work? Ask yourself, if I was doing a webinar with 500 people, and if Roger was to ask that question, how many would raise their hand? And that will answer your own question. RJ. RJ, how many people here use Fibonacci numbers? How many people here use the 50-day moving average? You see, RJ, sometimes I don't have to give you an answer. Sometimes you can give yourself the answer. You guys are we all on the same page? Are we all on the same page? It's a really simple concept. How many people out of 500 use this indicator versus how many people use this indicator? The 50-day moving average, Oliver, followed by the 200-day moving average, followed by the 100-day moving average, followed by the 8-day and the 15-day moving average. Okay? I'm not trying to talk smack about anybody. I'm asking you a very simple question. How many of you, there's 500 people here, how many of you use the 50-day moving average, and how many of you use Fibonacci and Elliott wave? Carmen, how many people here use Elliott wave, and how many use the 50-day moving average? You should answer your own question. I'm not giving you the answer. You answer the question for yourself. Got you stumbled here a little bit, didn't I? All right. 422, 419, 418.50. Yeah. I love Jeffrey. And if Jeffrey can use them, that's great. I'm not telling you that nobody uses them. I'm just explaining to you. If you want to understand which indicators work the most, ask yourself which indicators people use the most. I'm not saying that nobody uses his indicators. What I'm saying is, if you want to know the impact of a specific indicator, I think you guys are missing my whole point. I think you guys are thinking that I'm saying negative things about somebody. I'm not. What I'm telling you is, I'm explaining to you guys how to gauge indicators to see which indicator has the most power. All you have to do is ask yourself, how many people out of 500 or 1,000 use this indicator? That's all I'm trying to say here. Okay, so you have the levels here: 422, 419, 418.50, 419.8, 422.67. All right. Now let's do the Russell 2000. Because I asked somebody that question, and that was the answer they gave me. If you want to know how popular or how often indicators use, ask yourself, out of 500 people in the room, how many people are using this indicator? And I was like, oh, now I understand how to figure out if indicators are important or not. How many people are using them? That's all. Yeah, I'm good. I'm good. All right. I'm only trying to help you guys. 224, 220. All right. Next one. And I'm not beating a dead horse because a lot of people don't understand this stuff. The importance and the value of an indicator is determined by how many people use that indicator. All right, let's do our stocks. Charles River Laboratories tried to break the 100-day moving average, tried to break the 50-day moving average, couldn't do it, broken down, coming back down. This is an A-line stock, by the way. CELH. I mean, don't hate me for giving you stuff to think about. Tried to bounce off the quarter to date VWAP, and actually no, not the quarter to date VWAP, the 100-day. Let me change this. Tried to bounce off the 100-day, came right there, tried to bounce off the quarter day VWAP right here and broke down. Stephen, modified, yes. Modified, yes. RSI modified is a brilliant indicator. As it comes out of the box, it stands for really stupid indicator. RSI, really stupid indicator. Try putting a 14-day RSI on a stock chart and see how many signals you get over the last 20 years. BIIB, AMN, right there. AMN. Next one. I know there's a lot of controversy, folks, but I'm explaining to you an indicator is only as useful as by how many people use it. It's that simple. Right here. GFS. It's all I'm trying to say. That's my point. Right here. Look at that. Look at how many times it tried to break the 50-day moving average and the quarter-to-date VWAP. Couldn't do it. Broke down. SWKS. Right at the VWAP. This is a pullback, so you want to wait for this to trade probably below 96. QRVO. Now, this is the weakest chip stock right now. Now, why may that be useful to you at this point? Why would this be useful to you right now? Me giving you the weakest chip stock right now, which happens to be the supplier of chips to iPad for Apple computers. Why would right now, right before Micron earnings, why me giving you the weakest chip stock may be very, 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 very valuable? Yeah, 10 and 5, Richard. 10 and 5, not 14. You got to modify the really stupid indicator to make it smart. Okay, let's do the long side. A lot of people here protesting. Travelers, wait for it to be above 241. Yes, exactly. Yes, could be a good play for tomorrow. Exactly. Yes, Paul, exactly. Boy, I love when we're all on the same page. Yeah, don't hate me for just giving you guys information. And by the way, I love Jeffrey. Jeffrey's awesome. 241.42. That's where you would want to buy. Uh, right here. Beautiful. Look at the stock. Look at this stock. If you want to talk about a beautiful stock, this is a beautiful stock. TRU. I like the 10-day, the 5-day, and the 2-day RSI. The only RSI I do not like is the one that comes standard out of the box, which is the one you're supposed to use, the 14-day RSI. It's the really stupid indicator, the 14-day RSI. That's right, JT. That's it. There you go. Forward. Forward is moving forward. McDonald's I still like. McDonald's is still looking good. IRM is still, oops. IRM is still looking good. IRM is still looking good. What a beauty. Haas still looking good. PNR still looking good. MSI, Motorola, one of the few tech stocks right now that is actually looking really, really good. Really, really good. Look at that chart. I mean, look at that chart. Whew. If I can bottle and sell that chart, I would be a gazillionaire. All right, folks, that is all I have for you today. All right, keep your eye on semiconductors. Keep your eye on semiconductors and Micron towards the end of the day. If you have any questions at all, Roger at rogerscott.com. All right. And remember, indicators, the value of an indicator is determined by not how good the indicator is. It's by how many people use that specific indicator. That's all I was trying to say. I was just using Elliott wave as an example. It could be Gann lines. It could be stochastics. That was the point I was trying to make. The indicator's value is determined by how many people use that indicator, not by the name or what the indicator does. The more people use it, the more valuable it becomes. Everybody has the 50-day, 100-day, and the 200-day moving average on their charts. I will see you guys later. Bye, everyone. Have a great day. Customer Service Live, Cam and Gustavo show from 10 a.m. to 1 p.m. every single day. And here are some links for you. Bye, guys. Have a great day. Send me an email if you have any questions. I'll talk to you later.